Hi everyone, I am Karan and welcome to Karan's Gyan, and today I'll be talking about the great undervalued Indian banks. Before I start this video, I'd like to promote one of my previous videos in which I talk about the banks that you should invest in during this pandemic, where I only talked about large cap big Indian banks, where I considered Kotak Mahindra, ICICI Bank, HDFC Bank and Axis Bank. But in this case, I'm only talking about small to medium banks where the market capitalization is between 2,500 crores to 20,000 crores. And I'm choosing these banks and I'm presenting these banks to all of you because these banks would look good in your portfolio in the next 3 to 5 years. And hell, maybe one of them turn out as big as HDFC Bank in the future. So let's dig into this video and understand the criteria that I've chosen for choosing the banks that I'm presenting today. So first criteria, like I said before, it's market capitalization between 2,500 crores to 20,000 crores, hence small and medium banks. Price to book value between zero point 0.4 to 1.0, hence deriving the word undervalued, because if they have a book value of less than 1, it means that they're undervalued in the market. Next is negligible pledge promoter holdings. So the banks that I've chosen have negligible pledge promoter holdings. In fact, all of them have zero pledge promoter holdings except Karur Vyasa Bank, which has pledge promoter holdings as 0.1%. Hence the word negligible. Next, profit making, of course, a very important criteria. A good capital adequacy ratio, which is important for a viability of a bank. Uh, Decent NPS and a healthy net interest margin. As you know, banks borrow money from the public, they take deposits from the public, and they give them an interest on their deposits, which is lower than the interest that they receive on loans from the money which they got from the public. So the difference between the interest that they are receiving on loans to the interest they are giving on the deposits they have is known as net interest margin. Next, I'll be telling you the 5 shares that I picked up. They are IDFC First Bank, Federal Bank, RBL Bank, Karur Vyasa Bank, and DCB Bank. Karur Vyasa Bank is the IDFC Bank, First Bank is the cheapest of them all. It is trading at rupees 30 and it has the highest market capitalization. Whereas Karur Vyasa Bank has the least price to book value of 0.44. If I talk about other shares, IDFC Bank is the most valued out of these 5 shares with a good price to book value of 0.95. Next, DCB Bank is the smallest market capitalization share, market capitalized share of about 2,500 crores. Now, talking about the criteria I picked out. So, one criteria is the quarter one interest earned. So, as you can see, IDFC Bank has earned the highest interest rate, has earned the highest interest. That means this shows that they have the biggest loan book out of all the other 5 shares. And looking at its size of about 16,100 crores, of course, it means that it does have the highest loan book. Now, if I talk about the interest earned to its market capitalization, so this gives a good glimpse of the size of the company to the size of its loan book. And in this case, Karur Vyasa Bank has the highest interest earned to market capitalization. However, I come up with this figure. It is basically the ratio of quarter one interest earned divided by its market capitalization. And as you can see, Karur Vyasa Bank has earned about 1,370 crore interest in quarter one, whereas its market capitalization is only 2,800 crores. So this shows that it has a very good ratio of interest earned to market capitalization. Now, talking about its quarter one profit. So in quarter one profit, Federal Bank has taken the lead. It has a quarter one profit of 400 crores. So these figures are in crores, interest earned and quarter one profit. If I look at the profitability is basically the ratio of the interest earned by the banks to the profit has earned, and in this case, profitability of Federal Bank is the highest. Now, why is this criteria important? This shows that Federal Bank has least amount of provisioning and least amount of expenses, because of which its profit is higher than the other banks. So 11.64% for Federal Bank, and IDFC First Bank has the least profitability of 2.44%. Well, the reason for this is because IDFC First Bank recently came up as a bank about 2-3 quarters ago, where it merged with not 2-3 quarters ago, about a year ago, where it merged with an NBFC company called First. So IDFC and First Capital, both these companies merged to form a bank, and it was running into losses in about 2-3 quarters ago, and now it is turning profitability slowly, and hence its pace of profitability is slow. So this would be corrected in the near future. So in next 2 to 3 quarters, I expect the profitability to go up to 10%. Now, talking about capital adequacy ratio. So, capital adequacy ratios is an extremely viable ratio for is an extremely important ratio for the viability of a company. So, if I look at capital adequacy ratio, Karur Vyasa Bank has the highest capital adequacy ratio of about 18.13%. Whereas, if I look at gross NPAs, Karur Vyasa Bank has the worst gross NPAs in all these five banks, while IDFC First Bank has the least NPS. So this shows the quality of IDFC Bank to the quality of Karur Vyasa Bank. Now, talking about net interest margin is also an important ratio to gauge the growth of a company. So I see RBL Bank has about 4.85% net interest margin, whereas Federal Bank has the least net interest margin. Now, talking about a bonus component which I have given here to all my viewers that are watching my video till the end. So the bonus component here is the mutual fund holding and key investor stake. So mutual fund holding for IDFC First Bank is the least, it's about 2.61%, while for DCB Bank it is the most, about 27.78%. Now, if I talk about key investors and their stake, Rakesh Jhunjhunwala has about 3.18% stake in Federal Bank, and this stake is apart from the mutual fund holding. Warren Buffett has about 0.001% stake in RBL Bank. Please do not get into RBL Bank because you see Warren Buffett as a key investor. Warren Buffett has an extremely negligible holding of 0.001%, and it is not even in public, but it is found via news articles. So I found that Warren Buffett has only 6 lakh shares of RBL Bank, and only those shareholders are made public by companies, those who have above 1% shareholding. Now, if I talk about Karur Vyasa Bank, it has the best key investors and stake. It has the key investors are Rakesh Jhunjhunwala and Ashish Dhawan. Rakesh Jhunjhunwala has about 4.5% stake, while Ashish Dhawan has 2.45% stake. And this stake is apart from the mutual fund holding. Now I'll be pointing out the winners. So here I won't single out one stock as a winner. Well, these stocks are winners to different people. One person would want to take more risk, so he'll choose a stock that is more risky. For example, Karur Vyasa Bank, which is least valued, it has highest interest earned to market capitalization, it has highest capital adequacy ratio, and it is backed by strong investors. However, this is a risky stock because of its high NPAs, like I pointed out, high NPAs of 8.34%, and lowest price to book value. Well, because market gave its judgment that, well, this stock doesn't deserve a higher price to book value than about 0.44. So this is a risky stock. Whereas stocks like IDFC First Bank, Federal Bank, RBL Bank and DCB Bank look strong because of their good capital adequacy ratio and net interest margins. So if I talk about IDFC Bank, it is a winner in market capitalization, it is a winner in the highest interest earned, and it has the least gross NPAs. If I talk about Federal Bank, it is a winner in its quarter one profit, and it is a winner in being highest profitable among the five banks. It has profitability of 11.64% when I compare the interest earned to the profit has earned. Profit is profit after tax. And it has a good holding of Mr. Rakesh Jhunjhunwala and good mutual fund holdings. So it is a good stock. If I talk about RBL Bank, RBL Bank has the highest net interest margin and almost negligible banking of Warren Buffett. But again, I'm warning you, do not get into the stock just because you have heard Warren Buffett has a stake in this stock. This stock has about negligible stake of Warren Buffett. Karur Vyasa Bank I already discussed, lowest PB, highest interest earned to market capitalization ratio, highest capital adequacy ratio, and backed by strong investors. Whereas DCB Bank has the highest mutual fund holding of about 27.78%. If I look at DCB Bank, it has decent NPAs, a good capital adequacy ratio. It has the second highest capital adequacy ratio if I look at all five shares, a good net interest margin, and it's a small share. So if I talk about small companies, small banks specifically, and you want me to compare Karur Vyasa Bank to DCB Bank, I would ask you to go and buy DCB Bank more than as I would ask you to buy Karur Vyasa Bank, because here the numbers speak all the story. It has a good profitability, also higher profitability than Karur Vyasa Bank, and almost equal interest earned to market capitalization. Now, guys, this is pretty much it about my video on undervalued great Indian banks, and I hope you like my video. So please take my advice, uh, not by my word, but please do your due diligence again after watching my video, just so that you confirm my findings for yourself and for your satisfaction, because I have done a lot of research and I'm bringing out these videos after doing a lot of research. So these are not made up numbers, these are numbers after a lot of hours of research and thinking and analysis. So please don't take my word for it even after that, and do your own due diligence, so that, because you are responsible for your own money. So guys, this is pretty much it, and I hope you like my video. Thank you very much and have a nice day.